Hey traders, this is Blake Morrow with Trader Summit. Make sure you join the most highly anticipated online free trading event of the year, October 21st through 23rd at tradersummit.net. We're gonna have so many great speakers for you for those 3 days. We have speakers like Danielle DiMartino Booth, Brent Donnelly, Mark Minervini, Peter Schiff, Danny Blanchflower, Helene Meisler, and many, many more. So make sure you do register, it's free. Also, our sponsor Eightcap will be giving away 2 iPhone 14s to 2 lucky winners just for registering. So what are you waiting for? I'll see you there. Hey traders, this is Blake Morrow with Trader Summit, and I have with me, and it's been a long time, but I'm so glad he's here, Dirk Friczewsky of Friczewsky Financial Markets out of Germany. Good to see you, Dirk. How are you?
Hi, Blake. Thanks for having me on again.
You know, it is great to have you back. And, you know, I know we love to talk about the markets, and we actually want to see some of the markets you're looking at. But I wanted to ask you a couple of questions, being that you do live in Germany. We are heading into the fall, and you know the European Union and all of Europe, for that matter, is dealing with a serious energy crisis. So I want to ask you, from your point of view, how are you viewing it? How's it going to affect you personally? And do you see any light at the end of the tunnel for you this winter?
Well, let's start first with that kind of light at the end of the tunnel. Right now, a couple of economic research guys, they almost wrote something like they don't see the light at the end of the tunnel yet. For me, it's the same. There's a lot of confusing talk, and that's I think that's a serious problem. The politicians, they simply confuse everybody at the street. The average Joe on the street, and nobody knows what is going on in the next 3 to 6 months. The last week they started doing something and bring more clarity in that case. So they do something like a break. They just try to build a break in the gas price, so the natural gas price. And you got to know that the most expensive way to produce electricity is gas. That's why it is that level, and they're using it and to adopt that regarding electricity. And that's why everything is very expensive, because everything is built on the case natural gas price. And the higher natural gas price is going, the higher the electricity prices are going. So that needed to stop. And we had a severe situation. There was some, let's say, very smart, to tell you that one ironically, a very smart economic minister here in Germany, and he spoke about a so-called buying the crap out of the market everywhere. And of course, what happens when you signal the market, we are buying almost at every price, come on, of course prices go up. And imagine we have something like a natural gas price. So if you guys out there want to just take a look at that, that's the Dutch TTF futures, gas futures here in Europe, and we got a skyrocketing phase in direction 350 euros a megawatt.
Wow!
So that means, from a 1 year's perspective, we had 44 euros a megawatt in October 21. Now you see what happened.
Yeah,
and just compare that with the development of the prices in the US with the natural gas price, Henry Hub, for example. You just have something like a 2 or 3 times the price if you just compare the price development.
Right.
Yeah.
And so how's that? I mean, obviously it's going to be a very, very negative impact on the Eurozone economy, and especially in Germany. Being how do you feel that the economy is going to deal with it?
Well, to be honest, I mean, check out the gas prices I told you about. Yeah. And we are speaking about the most industrialized country in the Eurozone for years or 2 decades or longer.
Sure.
And we face the issue that energy prices are just at the level where competition is nonsense, absolutely nonsense. You can't win with prices like that. That's
Yeah.
impossible. So what you do is what we saw 6 to 12 months, we saw capital being exported in direction US, in direction to the US dollar because of the higher interest rates already. And now we are seeing a possible export of employment because big German companies, for example, BASF or even the auto industry, they are already there in the US. Of course, they may be investing in direction to the US. You don't invest in a region where you don't know where the energy price is in the next 6 months to 12 months or the road ahead. It's crazy. It's absolutely crazy.
That sounds crazy, and I feel for all of you, and I mean it is a, I know it's mostly a European issue right now, but you know, here in even in the United States, we're bracing for much higher prices moving forward as well. But speaking of higher prices, and since let's turn our attention to the FX market, we have the dollar yen. It's quickly approaching 150. I know it's Friday, mid-October, at the end of the session, end of the week, but the dollar yen's going out near 149 and almost 150 yen. How do you feel about this recent run up in the dollar yen, and what should investors be thinking at this point?
Well, I think we are moving in a direction where it is already very dangerous to be on the long side, and just to step in now. This is something like burning your fingers, possibly, but because there's something like we are at the so-called abyss for all these guys trying to be short the yen all the time. Once the Japanese already had an intervention, of course they tried to. From the history, we know a lot of interventions fail and just run the next move to the upside. But in the longer run, they have to do something, and they need to arrange something between the US, between the Fed, and between the Bank of Japan, because they are well reliant on each other doing business, of course. Sure. And imagine with a kind of a pace the yen devalued. It's a huge problem for the Japanese economy, because they have to pay a lot of bills in US dollars regarding commodities, for example, and they simply import a lot of inflation. And I think the US boys, on the one side, may be happy to travel to Japan and have cheap prices, of course, but on the other side, it won't help them in the longer run, because the less value in the Japanese yen you have, the less capable investors you have, and the less buyers you have for American goods or American services.
Yeah, it's a great point, and I have to say, you know, before we talk a little bit about the euro, I think that's really a key point that you make regarding the dollar yen, especially from a trading perspective. The risk really outweighs the reward almost on both sides of the trade at this point. You know, if you're not already involved in the dollar yen, you know, maybe this is the time where you have to take a step back and just wait for the market to develop, because you don't know if it's going to be an explosive, you know, blow off top higher, or maybe we will get some sort of intervention effort, but that might give you a better place to be long after that happens, just like what happened a few weeks ago, right?
Well, in addition, like we always observe that FX markets, of course, because of the interest rate, the scissors, and they are already speaking about doing something regarding the interest rates in Japan. They won't keep that negative interest rate forever. They are already moving, and they need to do something. They can't keep it that way. Kuroda is talking the last 3 years or maybe a longer term. They need to do something. They all know that, and I think it is possibly something like just checking out a new bias where the US dollar yen is maybe reversing a bit, just a bit, to the downside.
Right. Okay. Well,
Of course, my opinion.
Well, before we get into your opinions about the euro, and but I wanted to mention, if you guys and gals like what you hear from Dirk, make sure you give him a thumbs up. Dirk, I've known you now for at least a decade, maybe even longer. We followed each other on social media. You've actually met some of my colleagues in person, you know, in your travels through the United States. So we have a lot of history. But if you like what Dirk is doing here, make sure you give him a thumbs up, subscribe to the channel, and also make sure you register for our free event October 21st through 23rd. We got a lot of great speakers that are going to be in attendance for that. So make sure you do that as well. But Dirk, let's talk about the euro, because the euro just, continues in its very strong downward trend. And you've got a lot of bank analysts out there that are pointing, to see the euro dollar towards 95 cents, maybe, down towards 90 cents. Some feel that the euro is going to trade lower for quite a bit of time. How do those analysts figure out and try to forecast where those are going, where the euro is going, and how do you see the euro moving forward yourself?
Well, first of all, let's have a look at a couple of, let's say, targets. There are especially two banks, very interesting. One Scandinavian bank, the Danske Bank, and they said we will be hovering around the 95 marker, so we will stay sub parity on a basis from the next 6 months to come. And that's kind of interesting. Of course, first of all, where did they have that kind of a target from? Because we already went around the 95 marker. And what are they thinking? What is the reason for that 95 to stay in that kind of a level? And then we got another one, the Netherlands, a Dutch bank. So that's the ING, and they said 92. How did they manage to get that target from? Where did they manage to get that target from? And how do they measure that stuff? And I was just kidding in front of our interview here. Oh, they maybe sent some guy into the library, some guys calculating where that kind of a market could be. No, of course, they're using technical analysis and try to figure out where that kind of a euro-US dollar rate could hit the bottom or could the direction. So this is something like the 95, 92 markers. They're absolutely fine with Fibonacci analysis, and I can show you that if you like.
Yeah, let's see it. I'd love to see it.
Just share my screen. And possibly right now you could see that.
Yes.
So you got that chart technical analyzer, and you see the last low. Of course, it is not very, very difficult. We see the 95 level is already met. So that Danske target from 95 is already reached, but they say it might stay here for a period and maybe for the next 3 to 6 months to come. Why is that? Yeah, look at the calendar. I mean, we are right now walking and moving in direction winter here in the European Union and in the Eurozone. And so that's an issue about energy prices, heating prices and stuff like that. And of course, about inflation and the pressure of inflation. And right now we've got something like 10% inflation rate on a 12-month basis. So that's, of course, more than you guys have. And of course, we have the problems with more expensive stuff like heating, other reliable energies like even paying at the pump, paying prices you won't be you will be crying for, and paying prices for heating, paying prices for everything is very expensive. And this is something like the industry and especially the consumer will face a couple of issues in the next 2 quarters to come. So that makes sense from that point of view. And hiking from the ECB side may not help to get the euro-US dollar rate back up, really back up above the parity or further up the road in direction 105. So I'm not convinced that this will help. There's another target that's the 92 level. So we could squeeze that kind of a chart. Of course, we see that 92 level right here. That's the 160.18 projection level. So you see that one here. And this is quite easy. I mean, there's nothing like rocket science. Just put that last low here and just combine it with the last high from here. And you got all the Fibonacci projections to the downside. That's what they do. Nothing but Fibonacci analysis. That's it.
So let me ask you this. You, as a European living in the Eurozone, and looking at the euro and the backdrop of what everybody's dealing with regarding the Fed, do you and the trajectory that the Fed is still on as far as raising rates and what the ECB may do you think that the euro 92 target is a viable target, and is that where you're personally looking for the euro to go? Or maybe in other words, maybe a simpler question is, where do you think the euro is headed?
Well, I guess we might stay at this kind of levels for a longer time right now. We try to manage to get this kind of a rate on hold. Of course, the ECB will step up here, and the next meeting they were speaking about 75 basis points for the next hike to come. and they are speaking about 50 basis points in December. So we will be having 1.25% up the road. So that brings us to a certain level. So that kind of interest rate scissors, they are not widening anymore. They almost stop. So this is something which is on the first for the first part, which is quite good. Second, well, it only stops the interest rate scissors. They are not going back. So that's the problem. And regarding economical developments in the US, even it's something like between the choice between pest and cholera, the US are doing pretty well if you compare directly to the Eurozone. So still doing better than us. So I think it's quite difficult to be a Euro bull these days.
So where would be an area that you would look to be a seller if you saw it? So if the euro could rally, and let's say it got a bit of a recovery rally, what place would you be a seller?
Well, it's just something like this typical trader's bias. If you're a trader from the day trading or swing trading position, you always try to sell the rallies of the euro, because it's just a period where the US dollar is weak. So everything you see something moves, like from the euro walking up a couple of 100 pips and doing the same stuff like here, it's just an invitation from the market to go short again. For some reason, whatever happens, we saw that with around all this CPI data just on Wednesday, on Thursday, and then we just saw a breakdown. A break up, and this is another reason to sell euro US dollar again. And it was a nice invitation. It worked. And the other way around, of course, if something is overdone, just from the technicals, you just might grab a chance for an intraday trade. But if you want to stay long, if you want to stay into a trade for a couple of days, I would simply, not tell anyone to be long euro US dollar over a couple of days or even over a couple of weeks, especially when it comes to negative swaps all the time. Then you're betting against interest rates in the longer run, and it makes no sense. The only sense it makes if you really strongly believe that the euro has the ability to go up to the roof, but it won't.
Well, Dirk, I tell you, I love your thought process. I love the way the simplistic fashion of you looking at the markets. So tell us, as traders in the Trader Summit community, how do we closer follow your work personally?
Well, it's quite easy. Of course, I'm not posting a trade day by day. Sometimes I simply busy bee and doing some stuff, some other stuff around the whole day lately. But usually I post a couple of setups at my Twitter feed. You're very much invited to join, of course. FX Dirk is the Twitter name, the Twitter handle. If you like to get more information about my person, you just check out the YouTube channel. Just type in my name, Dirk Friczewsky, and possibly you will find the same stuff if you just use Google. It's not difficult. Just type in FX Dirk and you will find all the websites and all the pictures and videos I made. And for example, you will find my YouTube channel in English as well.
Awesome. Well, Dirk, I've been a faithful follower of yours. Unfortunately, I'm usually fast asleep when you do most of your tweeting. But if you're a trader in the European hours, definitely follow FX Dirk on Twitter. Dirk, I want to thank you so much for spending your valuable time with us. And that is thank you from myself on behalf of the Trader Summit community. So thank you.
Thank you again for having me on, Blake, and best wishes and greets to the US.
We'll talk to you soon.
Bye-bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.